Hey, what's up, you guys out there? This is Ruben here from Tenacious Tribe once again with another episode of our series of price action, technical analysis of training assets. Hope you guys have had a very nice weekend and a nice weekend because here where I'm at in Madrid and also where I spent last weekend back in Portugal. It was an holiday, so I ended up staying with my family, with my friends, with my dogs, with my surfing, with my nature, with my beach. It was beautiful. I love Portugal. It's a fantastic country. Uh, awesome nature, awesome landscapes, beautiful beaches, fantastic food. It's a top notch country. And my experience there is always fantastic. It's my home country, by the way. If you guys didn't know it already. And yeah, hope you guys have had a fantastic Monday also. And most of all, hope you guys are participating in this short squeeze that's happening right now with the BBBY, a little bit with the GME also. I am not, by the way. I am not. I learned my lesson with GME, which also curious enough is the asset, training asset I got for you guys today. A very personal story for me also. This was GME was a major cornerstone of my development as a trader, and it gave me a fantastic insight on a lot of lessons that I thought I knew from the books, that I thought I knew from a theory, but I mean I had to go through this experience in order to fully understand this theory that I was feeding my brain with. And off we go. Let's go through it. Asset of the day, reinstating is GME, GameStop Corporation. I hope the lessons you guys can take from this video can also help you dealing with what's going on with BBB BBBY BBBY. I hope it's helpful. I think that the major benefit of this video for you guys is it's gonna provide you with some insightful lessons and of how to perceive FOMO, how to perceive the fear of losing, how to perceive the impact of these feelings, these human emotions in price patterns, chart patterns. Excuse me. Uh, as among with some fundamental rules for your journey for your arsenal of tools as a trader, namely having a system with entry exit signals, position size rules, risk management rules, entry triggers, respecting having the discipline, having the self discipline, and the psychology game, and being zen all the time in order for you guys to make sure that you always, no matter what, respect your system, respect your risk management, respect your set of rules to keep you safe because you back tested them. You know what you're doing back then. Don't let the FOMO kick in. Don't let the FOMO or the panic or the panic or the fear of losing prompt you to make bad decisions that are not gonna be helpful for you on the long run, and have good odds of harming your capital. Let's go on to GME. Why do I bring GME to you guys today? It's been training. It's been triggering a lot of curiosity aside from BBBY. I know there are a lot of talks in Reddit about the short squeeze, the meme stocks, and all that. I this time not again this time because I've got a story for you guys about GME as I was telling. This time I got no interest in what the stories are in which stories are being published on Reddit. What's the experience of the investors there? No interest whatsoever. My interest is with the charts here, with the candles, with the chart patterns, with the price action analysis, with the trends, with the trend lines, and with the momentum, with the volume. That's what I'm interested in here today, and that's what I got for you guys today also. um, let's start with this chart. I mean, as a lot of people, a lot of investors were mentioning back then. I remember when this short squeeze happened with GME. This stock was not subject to technical analysis. Here are some traces already: resistance, resistance, breakout into new all-time highs. I mean, I don't know if breakout is an accurate word to describe what happened here. This was like a Godzilla-sized bullish candle here. This short squeeze was massive. This was wow, 1625.05% gain on this month. Yeah, I'm analyzing this from the time frame perspective. I'm not sure. I'm not sure this qualifies as just a breakout. This must be a juggernaut breakout, something like this. But the point I was raising, a lot of people advocating that this was a cult, as Jim Cramer is today, or was yesterday. But no, that this stock was not obedient to technical analysis. It is, and I've got exhibit A, B, and C and D for you guys. Resistance, breakout into new all-time highs, retest of this previous resistance area, which is now working, which is the after the breakout started working as a new support. What we see afterwards, we see that these wicks here are asking us to draw a clear downtrend line path. We also see these wicks here rejecting this level below the $30 range. Do something like this. Normally, I start with a market structure analysis. I wouldn't call this a downtrend. I wouldn't call this an uptrend. I would call this a consolidation. This is a technical analysis. What I'm seeing here with this stock with GME is it does obey to technical analysis. It's just it's the patterns you see or the technicals you see are not exactly in line with how neat they usually are and how different they usually are with other assets. Starting, this stock was abnormal from the outset. Look at this 1625.05. This is not normal, and the consolidation that happened afterwards was not normal. From a skill perspective, but if you see throughout this consolidation, you see that this series of lower highs and this series of higher highs not until this was an uptrend or downtrend. This was more a consolidation phase. And what you see here a bullish pennant pattern, which is a trend continuation, pattern, and it's rising after this gargantuan Godzilla juggernaut-sized bullish candle. So this is the main observation I gotta put forth about the structure of this market. No downtrend, no uptrend. Putting this perspective, putting this time frame, uh, just a market who made the new all-time highs, broke this ranging structure, perhaps even downtrend here, broke this ranging structure from its outset, and was showing all the signs of starting an uptrend, regardless of the cause of this Godzilla green candle, which we know already that this was the masterpiece of a big short squeeze conducted by retail investors against some sketchy hedge funds. What else do you gotta say here? Where are the bears here? I mean, despite the fact that this is a consolidation and this is the start of an uptrend, we got a new market structure. I can advocate this is a new higher high, perhaps new higher low. This is not as neat as you used to it, but the signs are here. This is a bullish pattern. This is a break into new all-time highs and a break of the previous ranging structure. A new uptrend could be starting. Not exactly in line with what you're used to, but it does tick all the boxes. And getting back to where we were, yeah, uptrends. Okay, what else we got here? A lot of bearish presence as of this level, the 80, $90 level. Bullish presence. Look at this week. This, and this. A lot of bullish presence at this level. Also, you definitely see another week. I love the weeks here. The weeks are pretty much as a sign. It's pretty much the candle whispering to me. Use me to draw your trend lines, or use me to draw your supply and demand zones, resistance and support areas, and yeah, and here we got another resistance area, touch. Okay, so now we know the market structure, consolidation area. I mean, this does not give us any other bias rather than to interpreting this as a trend continuation pattern after the price broke out from this ranging area. Um, Okay, which other are the signs of strength here? We established already like the supply and demand zones. This is the zones where the bulls are at. I saw something nice earlier today regarding the momentum of this stock. Can't even outlay this RSI momentum indicator here. You know that the RSI is an indicator to grasp and to measure the momentum of the market. This downward sloping yellow trend line tells us that this market was in a downtrend momentum wise as of May 2021. You can even argue that it was in a downtrend from as of the moment they made new all-time highs with that gargantuan candle. The momentum was bearish, but this is something very bullish that has been erupted well this month. So yeah, of course you gotta let the candle close, and we still have 15 days left, 10 trading days left for this candle to close. But the fact that this plot is breaking above this downward sloping trend line is telling us that the momentum is shift. Previously, the bears were in control of this market. As of the moment that we see a breakout of this plot from this trend line, we see uh, we see that the bears are picking, the bulls are picking up momentum. There are good odds that the breakout we're seeing here today uh, will be completed. Perhaps we never know. Let this candle finish. But I mean, lack of presence here from bears, lack of presence. Bulls stepping in here. Bulls breaking out here the trend line with this latest scandal. Is my bias, I have to say, is very bullish for this stock. I would not dare trading against this juggernaut wall of buyers here. This long-term resistance now turning into support. This gigantic candle here. I would not dare trading against this candle here. I'm not dare trading on the bearish side here. I'll be very careful also on the bullish side. But let's wait. Hold on a sec. Let's complete our analysis, price wise and technical analysis wise. Bearish signs here. I mean, what I don't like to see here, of course, is the average size of these bearish candles. This one is above average. This one, this one. So a lot of above average bearish candles, which is pure price action. Um, Pure price action related signal. It tells us that there's a lot of bearish presence throughout this consolidation. What else? Noteworthy also. Noteworthy also on the weakness side is that the price was once at $120, and it was in a blink of an eye trading at $10. Oof, the bears are strong in this market. Bear no doubt in your mind about it. But I'd overall say that my bias with this stock is bullish. I'm not gonna say I'm not saying I'm buying it. As a matter of fact, it is not fulfilling the rules laid down for my trading system. So the odds are, even if I get this breakout from this trend line, I will not trade it. But this chart patterns work. I'm just not gonna trade it because I don't have capital enough to distribute it for 5 strategies. I got once two strategies, I'd say. One that I absolutely mastered. The other one I'm developing, and I'm seeing fantastic results with. But it's more bottom fishing related. looking for bargains and think for bargains. The one I really master is a momentum strategy, and I've run like 5,000 back tests. I a giga thousand of charts. I know what to expect. I know what to do. I know the numbers. I master that. I master that strategy to perfection. So I haven't I this strategy employs enough capital of mine. I don't have any incentive to trade anything besides from that stock, which I 200 500% master. Although this classical chart pattern works. Having this said, how would you trade this? I mean, I'll of course let the month come to an end and this candle close. My target would be this bearish area. We've seen already the bear step from here. My stop loss would be below the support zone. Support is here. Bearing 1.6 risk reward ratio, not ideal, not beautiful at all, but put in perspective, I'm 97% gain here, possibly against a loss of potentially 58.52%. I mean, this rings some bells. This rings some bells to your trading strategy. If you run this analysis, you get to the same conclusions that as I'm getting here as to what the price should be doing. Then you gotta try to understand if this trading idea suits your risk management rules. If it does not, just don't trade it. One pro hint is that if instead of setting a stop loss here with a usual amount of capital you tend to trade with, instead if you reduce considerably your position size here, whereas you can not even using a stop loss but having a very small position size here, that would also do the deal. And just a hint, run the test and see if that would accomplish would comply with your risk management and position size rules. Otherwise, just don't trade it. Trade something else that follows your rules, and then don't hear to this noise. Don't let the FOMO kick in. There are plenty of opportunities out there. The market is abundant. That was a mistake I made back in 2021. I entered somewhere around here. I really felt the FOMO in first place in my skin. I really could not. I mean, I had a trading plan, I had a system, but I was weak, and I failed to respect my rules. I failed to be disciplined to stick to my system, to execute my system, and that was a major lesson I got from a message I got from GME. I entered somewhere around here, influenced by the FOMO. The FOMO was very strong. That was the first time I really felt the FOMO is a tsunami. It's a volcano, powerful volcano. It's a volcano strength, force of nature. And when everybody around you is behaving like this herd, like this human bias that says we do behave, then it really gets tricky for you to start wondering what happens if you don't get into this trade. Are you going to be able to live with this decision? You see a lot of noise around, a lot of theories around. You get blinded, you get greedy, and you enter disrespect of your rules, as I did. You exaggerate in your position size, you neglect or even deliberately disregard your risk management rules, which I did. I did understand more of the emotional side of the chart patterns of the markets. As of the moment I entered it, I start feeling I start feeling the fear of losing my capital here. I saw it losing. I saw my capital in the red, and then I felt the panic. I felt the depression of seeing my P&L in the red. I was by then. I remember I was swearing. I was praying to all gods that the price would get back to break even, for me to start over, for me to lick my wounds and get a second chance of pruning my trading, of maintaining my trading capital. And the gods must have been listening because the price got back to this level. I sold. I got a second shot. I was very lucky. But I mean, I can tell you that these lessons will stick to me. Will stick with me forever. I also realized that this sort of emotion is what produces resistance. For instance, traders like me who bought here and saw the price falling below your entry level, saw the P&L in red, were craving for the price to get back to that level to sell again and cut their losses or break even, and that creates resistance. A lot of fantastic lessons I learned from GME. Control your emotions. Don't listen to other people. Think for yourself. avoid FOMO, avoid panic or losing, profit from FOMO, by everybody else's FOMO, profit from their panic of losing, respect your system, manage risk at all times. And this was a very insightful talk to me. 20 minutes gone from for today, and that's all I got for you guys. Hope you guys enjoyed it.